Welcome to the exciting world of cryptocurrency trading on Binance. Here you can dive into the fast-paced and ever-evolving market of digital currencies. Binance is like a big online store for buying and selling digital currencies. Whether you're looking to invest in Bitcoin, Ethereum, or any of the hundreds of other cryptocurrencies, Binance has you covered. It's a popular choice for beginners and experienced traders alike. With its user-friendly interface and comprehensive resources, Binance makes it easy for anyone to start trading. Why choose Binance? Binance is easy to use. The platform is designed to be intuitive, so you can quickly find your way around. Even if you're new to cryptocurrency trading, it has many cryptocurrencies to trade. From well-known coins to emerging tokens, Binance offers a wide variety of options to suit your trading preferences. Binance also offers helpful tools and features. Advanced charting tools, real-time market data, and customizable trading interfaces are just a few of the features that can help you make informed trading decisions. This guide will help you start trading on Binance. We'll walk you through the basics, from setting up your account to making your first trade. You will learn how to create an account, buy your first cryptocurrency, and even set up orders. We'll also cover important topics like security measures to protect your investments and how to use Binance's various features to maximize your trading potential. Let's get started. Creating a Binance account is simple. Go to the Binance website and click on Register. You will need to provide your email address and create a strong password. A strong password has letters, numbers, and symbols. Make sure you use a real email address. Binance will send you a verification email. Click the link in the email to activate your account. Congratulations, you have successfully created your Binance account. Now let's move on to securing it. Security is very important when dealing with cryptocurrencies. Binance offers a feature called Two-Factor Authentication, or 2FA. 2FA adds an extra layer of protection to your account. With 2FA, you need two things to log in: your password and a special code. This code changes every few seconds. You can get this code from a 2FA app on your phone. Enable 2FA to keep your account safe from unauthorized access. The Binance interface may look confusing at first, but it's actually quite user-friendly. With a little bit of guidance, you'll be navigating it like a pro in no time. Let's break it down into smaller parts to make it easier to understand. Each section of the interface serves a specific purpose, and knowing what each one does will help you use Binance more effectively. The Markets section shows you all the cryptocurrencies available for trading. Here you can find a comprehensive list of digital assets that you can buy, sell, or trade. You can see their prices and how much they have been traded. This section provides real-time data on the market performance of each cryptocurrency, including price changes, trading volumes, and market trends. Click on the Trade section to buy or sell cryptocurrencies. This is where the actual trading happens, and you can choose from different trading options like spot trading, margin trading, and futures trading. This is where you place your orders. You can set the amount you want to trade, the price at which you want to buy or sell, and other parameters to execute your trades efficiently. Your wallet is where you manage your funds. It shows you the balance of your cryptocurrencies and fiat money, and you can also see the transaction history of your deposits and withdrawals. You can deposit or withdraw money from here. Binance supports multiple payment methods for deposits, including bank transfers, credit cards, and even other cryptocurrencies. Similarly, you can withdraw your funds to your bank account or another crypto wallet. Take some time to explore the interface and familiarize yourself with its different sections. The more you use it, the more comfortable you'll become. Don't hesitate to use the help resources available on Binance, such as tutorials and customer support, to assist you in your journey. Section 5. Funding your Binance account. Before you can start trading, you need to deposit funds into your Binance account. Binance supports various payment methods such as bank transfers and credit cards. Go to your wallet and select Deposit. Choose your preferred payment method and follow the instructions. It's important to note that each payment method may have different fees and processing times. Section 6. Your first cryptocurrency purchase on Binance. Now let's buy your first cryptocurrency. Go to the Markets section and choose the cryptocurrency you want to buy. Bitcoin, or BTC, and Ethereum, or ETH, are popular choices for beginners. Once you've selected your cryptocurrency, click on Trade. You will be directed to the trading page. Enter the amount of cryptocurrency you want to buy, and click on Buy. Congratulations, you have just bought your first cryptocurrency. Section 7. Setting up a limit sell order. A limit sell order allows you to set a specific price at which you want to sell your cryptocurrency. This helps you lock in profits and avoid losses. Go to the Trade section and select Limit. Enter the desired selling price and the amount you want to sell. Then, click on Sell. Your order will be executed automatically when the market price reaches your set limit. Section 8. Withdrawing your profits. When you've made some profits, you can withdraw them to your bank account. Go to your wallet and select Withdraw. Choose the cryptocurrency you want to withdraw and enter the amount. Follow the instructions to complete the withdrawal process. Withdrawals usually take a few hours to process. Be aware of any withdrawal fees. Section 9. Exploring different cryptocurrencies. Besides Bitcoin and Ethereum, there are thousands of other cryptocurrencies available on Binance. These are called altcoins. Some popular altcoins include Binance Coin or BNB, Cardano, also known as ADA, and Solana, referred to as SOL. Each cryptocurrency has its own unique features and use cases. It's essential to research and understand a cryptocurrency before investing in it. Don't put all your eggs in one basket. Diversify your portfolio by investing in multiple cryptocurrencies. Section 10. Understanding market analysis. Market analysis is crucial for making informed trading decisions. It involves studying market trends, news events, and other factors that can affect cryptocurrency prices. Fundamental analysis focuses on the underlying value of a cryptocurrency. Technical analysis uses charts and indicators to predict future price movements. By combining both fundamental and technical analysis, you can gain a deeper understanding of the market and make more profitable trades. Section 11. Technical analysis and risk management. In this section we will delve into the intricacies of technical analysis and how it can be effectively used to manage risk in cryptocurrency trading. Technical analysis is a powerful tool for traders. It involves studying price charts and using various technical indicators to identify patterns and trends that can inform trading decisions. By analyzing historical price data, traders can make educated guesses about future price movements. This method is based on the idea that market prices reflect all available information, and that history tends to repeat itself. Some popular technical indicators include moving averages, or MA, which smooth out price data to help identify the direction of the trend. Another widely used indicator is the Relative Strength Index, also known as RSI. The RSI measures the speed and change of price movements and can indicate overbought or oversold conditions in the market. Bollinger Bands are also a crucial tool. They consist of a middle band being a simple moving average and two outer bands representing standard deviations. These bands expand and contract based on market volatility, helping traders identify potential breakout points. However, it's important to remember that technical analysis is not foolproof. Market conditions can change rapidly, and no indicator can predict the future with absolute certainty. To manage risk effectively, you should always set stop-loss orders. A stop-loss order is a predetermined price at which your cryptocurrency will be sold to prevent further losses. This automated feature ensures that you don't have to constantly monitor the market and can help you stick to your trading plan without letting emotions take over. By using stop-loss orders, you can limit your losses and protect your investment from significant downturns. Remember, cryptocurrency trading involves risk. The market is highly volatile, and prices can fluctuate dramatically in a short period. Never invest more than you can afford to lose. It's crucial to have a clear understanding of your financial situation and risk tolerance before diving into trading. Start small, learn continuously, and trade responsibly. Begin with a small investment to get a feel for the market and gradually increase your exposure as you gain more experience and confidence. Education is key. Read books, attend webinars, and participate in trading forums to expand your knowledge. The more you learn, the better equipped you'll be to make informed trading decisions. Stay updated with the latest market trends and news. Use multiple sources of information to get a well-rounded view of the market. This will help you make more accurate predictions and stay ahead of the curve. Practice makes perfect. Use demo accounts to practice your trading strategies without risking real money. This will help you refine your techniques and build confidence before trading with actual funds. Keep a trading journal. Document your trades, strategies, and outcomes. Analyzing your past trades can provide valuable insights and help you learn from your mistakes. Set realistic goals and maintain discipline. Having a clear plan and sticking to it can help you stay focused and avoid impulsive decisions that could lead to losses. Celebrate small wins and stay motivated. Trading can be challenging, but maintaining a positive mindset and recognizing your progress can keep you motivated and on the path to success. Finally, balance your life and trading. It's important to maintain a healthy work-life balance and enjoy hobbies outside of trading. This will help you stay refreshed and focused when you return to the market. Reflect on your journey and feel accomplished. Every step you take in learning and trading brings you closer to becoming a successful trader. Look forward to future opportunities and continue to grow. In summary, technical analysis and risk management are essential components of successful trading. By using technical indicators, setting stop-loss orders, and continuously educating yourself, you can navigate the volatile cryptocurrency market with confidence, trade responsibly, and stay committed to your growth as a trader. Thank you for watching. If you found this video helpful, please subscribe to our channel for more content on cryptocurrency trading and risk management. Follow us on social media for the latest updates and tips. Happy trading!